yes, refinance activity has increased. I'm not sure I would call it a boom. What I'm starting to see is some folks who um, have some money on the table in terms of how much they can save per month. And yet, the amount of savings that they can grab now, somehow in their mind, they've decided isn't good enough, that they want
Mm.
to wait further. And in part, what I'm observing is some of these folks seem to be wanting to hold off because the media has talked so much about interest rates are about to fall. Like, for example, the Fed meeting next month. And again, this perception that when the Fed drops the Fed funds rate by 1/4%, or even if it's a 0.5%, that mortgage rates are going to follow in similar fashion. That's simply just not technically true. It doesn't work that way.
Mm.
But between that kind of news that is just being, broadcast daily, daily, daily about rates are about to fall, and then of course layer into that the coming election, where there's a lot of homeowners out there that think the election is going to have something to do with improving mortgage rates. And so between the
Mm.
two, I mean, I'm talking to some homeowners right now where, in fact, I could think of one where I started the conversation with them in April of this year. Here we are in August going into September. For the last month or so, I've been able to show them that I can save them over $400 a month in their mortgage payment. In fact,
Wow.
not about a week ago, I showed that I could save them $525 a month in their mortgage payment. And their reaction was, well, that's great, but we want to wait because we want our target goal is to save 700 a month. Well, I had to point out to them that to get to 700 a month, we're going to have to see current rates drop to like 5%. And there is
Mm.
no forecast from any major player in the financial markets that is suggesting that we're going to hit that anytime soon. And so it gets into that old saying, right? A bird in the hand, worth two in the bush, right? I argued that they ought to take advantage of these savings now. And if we do hit a 5% level, which probably would take 6 months, probably a year, we hope. And again, that goes against the grain of most of the major players' forecasts. NAR, California Association of Realtors, the Mortgage Bankers Association, Fannie Mae, that goes against all of their forecasts. But if we hit that in the next 6 to 12 months, then they can refinance again because the
Mm.
refinance transaction is much more efficient than it used to be.
Well, that brings up the point of, like, is there a rule of thumb that someone watching today or they're watching later says, hey, is there a rule of thumb for the rate improvement to justify a refinance?
Well, yes and no. There used to be, decades ago when I got in the mortgage business, there was a there was a rule of thumb that you generally had to see about a 1% improvement in your rate
Mm.
to justify the cost of refinancing your home. I would argue that that's a little bit outdated. I don't think it really holds that well anymore, in part because the cost side of getting a refi is not what it used to be. I think I've mentioned on this program before, years ago, back in the 80s, a 0 point loan, a 0 point rate loan was very uncommon. It just wasn't the case. I mean, I can remember when I just got started in early 1982, every time we originated a loan, there was almost always at least a 1 point fee to the borrower. And that
Mm.
would be on top of the other costs, appraisal, credit report, escrow, title fees, et cetera. Well, the industry has moved to the point where paying points to get a rate, whether it's a purchase or a refi, just doesn't happen anymore. At least it's not advisable because it takes you too long to recoup that money up front in points from the lower monthly payment from a slightly lower rate. So when you're talking about a 0 point rate, you're talking about closing costs that are relatively modest, even at relatively good sized loan amounts, 400, 500, 600,000. Because of that, you don't necessarily need to see that 1% improvement in rate before you take advantage of it. It really comes down to looking at the specific numbers based on your situation. That's what we like to do. Is if somebody's thinking about a refi, they need to call me with just a short list of some basic information. I can give a written worksheet that spells it all out, and then we can talk about whether or not the trade-off is there to go ahead and do the refi now, given the costs involved, and improve their monthly payment.